Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the short term, the macro, and everything else you need to know about the current price action, what to expect, and what is likely to occur next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in joining our VIP channel and taking your trading to the next level, you can contact me in the pinned comment of the free channel by clicking my name or these links for more information. The VIP channel has been around for 39 months. You can find our entire trading track record over here. 1,062 trades, 862 wins, 202 losses, a 81.16% win rate. Every single trade we post has exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. Every trade is absolutely live, and you'll get access to all of this by the VIP channel. You'll also get access to our group chats, our general chat, trading chart and education chat, news, help, daily video, and trade setup chat. Go ahead and check it out by contacting me, and we'll jump into the video. So taking a look, guys, at that short-term price action. Of course, as we enter the weekend, and during the weekend, volume and volatility take a massive downturn. With that, we don't generally see too much movement in the charts. If we do take a look over the weekend, we really haven't seen anything happen for Bitcoin besides this basically this slow grind upwards, but more or less a consolidation, very, very tight consolidation around a $400 range. At the moment, Bitcoin is still grinding upwards on the short term, coming close to that current short-term resistance at 59.6 to 59.8. This is the current resistance we will need to break above to see a short-term continuation upwards into that 61.9, 200 SMA, and mid-line level. Of course, with this, we do have a downtrending resistance right over here, as represented by that downtrending trend line. And again, that POC level, as well as the peak on the VIPV, which could act as a temporary resistance, which could be a barrier for a continuation up toward the midline in this channel. We'll come back and discuss much more about this in just a moment. Moving over to the market data for now, we can see, as we just mentioned, as we enter the weekend, volume and volatility drop. We can see that as an expression, of course, of the total liquidations and the overall volume dropping 52% to 55 billion. Liquidations down 66% at 43 million. Of the 43 million in liquidations, 13 million have come from long positions and 30 million have come from short positions. So as we can see, the data is really suggesting not really that much movement in the market. Moving over to the broader markets, the DXY is still continuing to the downside. We are watching that yearly uptrending diagonal trend line. Again, this yearly uptrend of this broader symmetrical triangle formation. We are watching very closely for a reaction at this level of uptrending support. Again, a breakdown or loss of this level will facilitate a macro directional continuation downwards to these lows, but most importantly, this will be exceptionally bullish for risk assets. S&P 500, Dow Jones, traditional markets will very likely go up. Bitcoin has had its mind of its own recently, but of course it is still pegged to the dollar. It is still again valued against the USD. So when we do see the USD generally drop in value, we generally see those other risk asset markets increase. So we can assume that Bitcoin will likely rise in value as well if this yearly uptrend is lost. So we're coming very, very close to this level. We're watching closely for that reaction. Looking at the S&P 500, fantastic weekly move over here, engulfing this prior red candle and engulfing that other red candle. Two red weekly candles engulfed in a 1 week massive green god candle, and this might be one of the biggest green weekly candles we have seen for Bitcoin since October 2023. A fantastic week for the S&P 500 after what was one of the most brutal weeks in over 4 years since that COVID correction. So looking very strong, and as we've been saying, guys, and as we've said this entire time, provided 5,300 remains as a weekly high, a level of support, do not expect us to enter a high time frame downtrend. In fact, expect continuations upwards. We are still expecting moves to 6,000, provided 5,300 holds. If 5,300 is lost, that will be the first high that we have broken below. We had highs over here, we found support. High over here, we never retested. High over here, we never retested. High over here, we have retested. So if we lose this level, it will be the first high in this, year and 7 month long uptrend that we have broken down, which could indicate a shift in the high time frame direction, thus entering a macro downtrend. So until that happens, we are still very much bullish. That is it, guys. Let's jump into Bitcoin. We're going to be taking a look in massive detail at the short-term price action, the daily price action, and going over the Ichimoku Cloud baseline on the weekly chart. So let's go ahead and jump into it. Now, before we do, if you do want to support the channel further and you want 15% off, and this is the minimum, you can get up to 45% off depending on your trading volume, but 15% base off all your trading fees for life. Join and sign up to BitGet, BitUnix, or BingX. The link's down below. These are the exchanges we use on this channel, and I've personally been using for a very, very long time to trade. You can go ahead and check more information about that in the ad we're going to play in just a moment. Check them out for 15% off your trading fees for life, as well as a nice hefty sign-up bonus. Check it out, and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into the video. So we're going to start on this daily chart discussing Bitcoin, and we're going to keep today's video nice and short and snappy. It is a weekend, people got stuff to do, I got stuff to do. Bitcoin hasn't done much, so we're going to go outline the facts and the things we need to be watching moving into the new week and then get on with it. So, taking a look at Bitcoin over here, we are still underneath the midline. The midline, for those who are new to the channel, is the most significant level at the moment for a bullish continuation, meaning if we want to see that price action move into the high 60 range, the 70 range, if we want to see the price move up into this upper region of this broader descending channel formation, which again is a downward consolidation between two downtrending parallel trend lines, which are equally respected as support and resistance, which we can see here, we need to break above the trigger point, which can facilitate a directional continuation into the range high or the upper region of this consolidation range. Therefore, we would need to break the midline. If we look historically, the midline has acted as a major area of both support and resistance. So it's a historical area of support and resistance. We know that these historical trigger points, if we look at them, we can see directional moves come as a consequence of either rejections, breakdowns, or break upwards from these levels, and therefore we can identify it as a trigger point, a bullish trigger point in this instance, because we'd be breaking from the bottom side upwards. Exhibit A over here, Exhibit B over here. In both instances where we saw daily candle closes above, we saw directional continuations to the range high. You can see the range high retest as per these red arrows. If we take a look at the bearish aspect, directional continuation below over here, a prime example, as well as over here, we saw directional continuations toward the range low. And furthermore, we even had another one over here, daily close under, directional continuation to the range low. So we've got 3 exhibits in the last 4 months of breakdowns resulting in directional continuations to the lows, and 2 instances where breakups result in directional continuations to the range high. That is 5 separate occasions since April in which this trigger point has acted as a major directional trigger point for those continuations to the respective range high or range lows of the channels, depending on the time frame of which that has occurred on. So very important level we need to break above. That level is a dynamic resistance. Dynamic meaning the exact price of that resistance is going to change based on the date of which we retest, as it is a downtrending line. You can see that at the moment vertically we are sitting at 61,640 for that resistance. We also have the 50 EMA, which is coming down slightly to move along that trend line. Once again, we can see how that happened over here. We can also see that when we broke above both of these levels, we saw those directional continuations. So we are looking for a break above that midline as well as that 50 EMA to see those directional continuations higher. So that means while we're sitting underneath this trend line, we do pose the risk of a continuation back to a range low. Now, I do not think that risk is great. Meaning I don't think that we have a high risk of doing so. The reason I say that is because we have already seen the retest of the range low as a consequence of the breakdown. At the moment, we have established some short-term supports within the range between our range low and our midline, which we'll get into on our short-term analysis. But the key one we would need to sustain above is going to be our first sell-side liquidity or first retest after the breakdown. Okay, this one was our break-in. It doesn't count. This was our point 1. So this is going to be our point 1 retest. This is going to be the critical support level in which Bitcoin will need to sustain above to prevent a directional continuation into that range low. So provided Bitcoin can sustain above this level, we should eventually see a break through that midline. If we were to break down from this level, that is what would likely trigger a continuation to fill this low volume range on the VRPV. You can see the VRPV is dropping off significantly into that lower pocket of around 54 to now around 53.5. So if we were to see a loss of that level, we would see a directional continuation into those lows. We'll come back and discuss that in the short term. And again, like we said, a daily close by the midline, we see directional continuations upwards. And like we've said many times, this pattern here is a consolidation pattern. The larger the consolidation, the larger the reaction. And what do I mean by that? If you think of like a pressure cooker. The pressure cooker is building up with pressure. You build it up too much, eventually it just pops and explodes. Like a balloon, you blow up a balloon, it builds up a pressure and eventually just pops and it explodes. So the larger these consolidations are, generally the larger the reaction we see from these consolidation ranges once the consolidation range breaks, whether it breaks upwards or whether it breaks and invalidates downwards. So for us to get an invalidation of this range, we would need to see a daily candle close underneath the range low, and that would invalidate the expected outcome of the range. The reason the upward directional continuation is the expected outcome is because this is a bullish consolidation. It is a descending channel formation as a consequence of the price action entering upwards. We generally see the price action follow the direction of which the price entered the consolidation in. Take a falling wedge, for example. If we have a falling wedge pattern, we enter the pattern upwards, we exit the pattern upwards. Okay, that is just one example of a pattern. Of course, there are numerous other patterns, and these aren't, 100-degree certainties. These are just high probabilities. So high probability and certainty are two completely different things. Do not mix up the two. Just for something that's highly probable doesn't mean it is certain. If you could roll a dice, there is a 1 in 6 chance you land on a 1 and a 5 in 6 chance you won't. There's a very high probability you won't land on a 1, but landing on a 1 is always still possible. And that is how you have to look at trading, and that's how you have to look at the market, because there are news events that can come out. There are things in the global economic environment or political environment that can occur randomly without notice, that can massively shift the market sentiment in directions of which the charts could not allude to prior to that news event, which can change the outcome of things that were once expected to now something that is unexpected. And those things don't, invalidate the analysis, but they add elements to the analysis which you didn't have access to that information at the time. So as a trader, you need to be adaptable, you need to remain open to new sources of information, but you also need to be able to filter through things that are just considered, or what you consider based on your strategies, noise and irrelevant. Because if you take in all the information, you try to analyze everything, you're just going to end up confusing yourself and you're going to be on the fence. You're always going to be on the fence because you can always find data to support any sort of narrative you want if you don't apply the context to it. So let's jump into the short term. This is the short term chart. I'm going to keep it simple. This is very simple. The 200 SMA and midline resistance is the level we need to break above to see the continuation. We need a daily candle above that to see the continuation. Perfect. We know that is sitting at a price point of 61,400. So 61,400 is literally going to be this pocket over here. So it's actually come down a little bit since our last video. Again, like we said, it's a dynamic resistance. So essentially we need to break through this downtrending diagonal resistance. Okay, so how do we retest this resistance? Bitcoin is going to need to fill the gap in the VRPV right over here. By doing so, we need to break above the short-term resistance we are developing. So for us to expect a directional short-term move upwards, we need to break through the resistance. And therefore, this level is a resistance of which we could see rejections develop from. If we see a rejection develop from this region, we're moving down with the VRPV into the first gap, which is going to be a 57K, which happens to be our short-term horizontal support level. Perfect. So expect short-term corrections if this level fails to break. And by fails to break, I mean we see a retest, a break above, and failure to sustain. We would then expect to see directional continuations downwards. If we break above this level and sustain the support, we then expect the directional continuations upwards and likely through. That is going to be bullish. Okay, so we have a short-term trigger point. If we see a retest of this support level, it is not too important. The important level, as we mentioned prior, is going to be this horizontal red line, which again, if we lose, we see a directional continuation downwards. That horizontal red line is right over here. This is the red line, this exact same price point we need to sustain above. So on the downward price action, anything between where we currently are and this red line more or less means the same thing. It is going to be a chop level. This is just a chop zone. So the price will likely zigzag around over here before it decides, does it want to continue upwards? Do we have the strength to continue upwards? Or do we have that selling pressure to push the price lower? That is where we are sitting. Now, if we see a loss of that red line, we will see a retest of our last level, our last low. This is going to be our descending channel range low of 54K. And our last line of support. A loss of this level invalidates the descending channel, and we will see a directional continuation much lower. Provided we sustain this level, the range low will be retested, and we will likely see a bounce once more. This is the bearish scenario. This is the worst case scenario. A drop below this level, we invalidate the channel, and we continue much lower. That is a bearish scenario, and that is a bullish scenario. Everything that happens between right now should be considered chop. Okay, I would not be longing at resistance. I would look for longs down in this support region if retested. If we break through resistance, we sustain. You could look for continuations upwards. But until then, we are patient. We are patiently awaiting the direction of which Bitcoin will likely move. And then we'll jump on the train of which is moving in that direction. And sometimes it's not about predicting. Remember, your job as a trader isn't to foresee the future. Your job is to outline a variety of possibilities based on the data available, assign probability to those possible moves, and then plan strategies to benefit from whichever move actually plays out. And that is how you trade. You don't sit here and try predict the future. No one can predict the future. We already talked about how random events can pop up that you cannot even expect, okay? We don't know what's happening. We don't know what news is going to come out tomorrow. It could be something that happens that could throw the markets off. So it's better to have plans and execute those plans rather than trying to lock in definitive decisions before we have definitive confirmation. So let's go ahead, guys, and jump over to the macro charts really quickly and then wrap up the video. There is a key level I'm watching on the macro charts, and this is going to be the Ichimoku Cloud baseline, the red line. Now, this level, by no coincidence, nothing here is a coincidence, lines up exactly with 61.4. Where is 61.4? You should know, if you've been listening to the video, 61.4 is the downtrending midline. It lines up. We have now got another area of resistance and confluence with this point. Therefore, we know if we break above here, we will see something of a directional continuation. The last time we dipped below was over here. When we were able to get back above it, we saw directional upward continuation. We would expect the same thing. That again confirms, or should I say adds to the theory that a break of the midline would result in a directional continuation upwards. Thanks for tuning in, guys. Have a fantastic rest of your day. We'll catch you in tomorrow. See you then.